Buying a home can seem a bit overwhelming because there's multiple steps and factors that affect the process. One of those things is homeowners insurance. So in this video, we're going to talk about the most important things that you should know about homeowners insurance so that you can make sure that you're properly covered and secured if anything happens to your house. We're going to go over a couple of questions. And today with me, I have Travis Arment from American Family Insurance, and he's going to help us answer these questions. Hey, Travis. So the first question that I get from people, especially first-time home buyers, is what is homeowners insurance? What does it cover and what does it not cover? So can you explain that to us?
Yeah, Joe, thanks for having me on your show here. So, homeowners insurance is going to cover your house. If there's a fire that could happen, if there's somebody breaks into your house, steals your stuff, I've had that happen. Wind or hail is kind of a big deal in Minnesota. So, if a hailstorm hits your roof, you got to replace your roof. That covers that. Wind damage, blowing off shingles, or a lot of stuff that could happen to your house, right? There are some things it doesn't cover, like it's not a maintenance policy. You know, a tree is leaning over your house and it's about ready to fall. I get that a lot. You know, is the insurance company going to cover that? Ironically enough, no. You have to cut the tree down before it hits your house. We're only going to cover it after it hits your house, which is kind of frustrating. I get that. But that's an example of what it doesn't cover. There's a lot more, obviously, exclusions, like war is not covered, things like that. But, you know, you can always ask your agent and they'll dive into that nitty gritty stuff.
Yeah, and I guess, every situation is different and there's different scenarios. I've had people ask me, hey, so if my AC breaks, like, does insurance, the home insurance cover that? And obviously the answer is what?
Yeah, that's no, right? It's a mechanical break. Now, if a hailstorm or windstorm ruined that AC, that's maybe a different discussion.
So that's a good to distinguish maintenance and, things that happen to the house that's beyond your control, right?
Yeah, 100%. Yeah.
Okay. So what do you have to pay if, say, a tree falls on top of your house? What's the cost of that?
Yeah, that's a great example. So a tree fell on my house. I'm only out the deductible. So whatever deductible you choose, and they usually start at $1,000 and go up to 10,000. We're seeing a lot of percentage deductibles now. I know this was kind of a tough year in Minnesota. We had a lot of claims, right?
Yeah.
And so we're starting to see companies put on percentage deductibles, 1% of coverage A limit. So as an example of that, if you had a $300,000 house, you'd have a $3,000 deductible if it's a 1%. Most of my clients have a $1,000 deductible. I personally have a $2,500 deductible. I don't like making small claims. And as long as your emergency fund has like 2,500 in it, I feel comfortable with that higher type of a deductible.
Okay. So the deductible is the cost of you making a claim if something happens to your house and you want to do an insurance claim. And then it sounds like it just depends on how much you feel comfortable putting out of pocket if something happens, whether it's $1,000 or in your case, you like personally to have $2,500. So it just kind of depends on the person, the homeowner, and what they feel comfortable with, right?
Yeah, it saves me a little bit of money on the premium every year to have a higher deductible. So
Okay.
that's why I chose the 2,500. You know, I want my premiums low just like anybody else, Joe. And so, you know, if a tree, falls on my house, I pay the first 2,500. If the damage is 5,000, I pay 2,500, and then American Family's going to pay the other 2,500 to get me back to whole.
Okay. What's the difference between policy cover or cover actual cash value or replacement cost value? So let's keep with a, like, say, roof example. So you get some hail damage. Maybe not your entire roof is damaged, but part of it. So what's the difference between actual cash value and replacement cost value?
Yeah, that's a good example. Um, and that's interesting too. Your example of saying part of the roof's damaged, but not all of it. But let's say, just to make it simple, let's say that the whole roof is hail damage,
Okay.
and so contractor comes out there, and then you set up a claim. The adjuster comes out there at the same time. I do like to get those guys on the roof together. You don't have to do that, but they're going to look to see if there's damage. Actual cash value is going to just pay out the depreciation of that roof. So if that roofs are usually good for 20 years, Joe. If that roof is 10 years old, you're going to get 50% of what it takes to replace that roof. So let's say that the contractor says, this is $20,000 to get you a new roof. It's 10 years old, so now you're only going to get $10,000, and then you have to pay the other $10,000 to replace the roof, right?
Okay.
So that's actual cash value. Replacement cost is typically what I see on houses. That's going to be, in that example, you're going to get $20,000 when the work is completed and you get a new roof. So you have a whole lot more money with replacement costs.
Okay. Yeah, I feel like I like that option better. That way you don't have to worry if, the roof or whatever the damage is, if there's any depreciated values, get the full replacement cost for it. So I think that to me sounds like a better option. But, again, it just depends on what you want to do and have covered, right?
Yeah,
So-
100%.
okay. So another question that I get a lot is like, how much would it cost to rebuild my home in the event of a total loss? So let's say God forbid, your entire home burns down. Like how much does it cost have your home built, or how much would you be covered for if that would happen?
Yeah, no, that's a great question. And we like to, so we want to insure the house at 100% replacement cost. In order to get replacement cost coverage, you have to have the house insured at replacement cost. And insurance companies don't let us we can't just make up that number, Joe. They make
Okay.
us run it through a calculator. And there's industry standard type calculators. I think we call it exact value. So you plug in the specifics, the square footage of the house, you plug in all the ins and outs of it, and then it pops out a number at the end. And typically, right now, we're seeing it's about $200 a square foot to rebuild a house.
Okay.
And so that kind of is a number. About 5 years ago, it was like, I think $150 a square foot and so we've really seen that number ramp up. And it's important to kind of check with your agent to make sure you're comfortable with those limits. If you do any renovation, let's say you do the basement there at your house, Joe, and you're
Yeah.
like, "Oh, maybe I should increase my coverage then." Just talk to your agent and they can kind of run that through the calculator and bump up that coverage to make sure you're not going to be out any money in case you had a total loss.
Okay. So how is inflation? So you mentioned the cost of building a home. Obviously, the cost of everything has been going up. So how has inflation affected coverages? And should you, as a homeowner, if you haven't updated it in the last, year, 2 years, or should you increase your rebuild value of your home insurance, or what should you do?
Yeah, that's a good question. Insurance companies have, I guess, what we call inflation guard. And so it's built into the contract. I suppose the state approves it, regulates it. They want to make sure that that house is going up every single year. So this year has been unique. I've never seen it go up this much. And so what we've seen this year is claims have gone up dramatically in Minnesota over the last 4 years. This year's particularly was bad, but also, that inflation guard is up quite a bit. They use I forget the CP index or whatever, and so that I believe it's like 9% over here right now is what it's gone up. So if you had your coverage at like 300,000 and all of a sudden now you're covered at 360,000, that's part of what we're seeing too. So when rates go up, it's also factoring in the fact that you have way more coverage every single year to keep up with inflation. And so that's how they solve that problem. Now, I do have some clients that have been with us for like 30, 40, 50 years. And that inflation guard just hasn't kept up, right? So it's still important to kind of make sure that your agent runs through the calculator to make sure that that number is correct.
So that's a great question. So, or a good point. So how often should people be reviewing their insurance policies and coverage to make sure that everything is looking good? What's your recommendation on that?
I'd say every year. So we
Every
do it
year.
every year. We reach out to our clients and it's kind of how we doing for you checkup, and then we'll just go through the coverages because things change so much. And so I think it's important to kind of check with your agent every year to make sure that you're happy with the coverages, you're getting all the discounts, and if there's any changes that are coming up, run those by the agent just to make sure you're not putting your family in jeopardy of paying out a bunch of money that you don't need to.
Okay. Yeah, those are good points. So let's talk a little bit about like personal property. Obviously now a lot of people are working from home, and they probably have expensive equipment, or even like if they have the famous Peloton bike or other things that are personal and expensive. What's the best way to go about making sure that those things are covered, or making sure that if something happens, the insurance company is gonna believe you that you had those things in the house and cover those. What's your recommendation?
Yeah, that's a good question because, like, on the house, you'll have it's a valued policy state. So if your house is insured at 300,000, Joe, and that's a total loss, you're going to get 300,000, right? If it's considered a total loss, that is. on personal property, they want you to itemize everything, which is kind of a lot of work, you could imagine. So I recommend going through your house, take your iPhone and take a video of everything that you own. I'm seeing books in your background. Like they'd probably want you to itemize all those books and put a valuation behind that. And so it's just really nice to jog your memory if you have your, documented maybe pictures or a quick video on your iPhone. Hopefully that phone's on you when you're out of the house. But a lot of times you can't get back into the house, right? If it's burned down or if it's unsafe, the firemen, they're not going to let you go through the house again, or there might not be a house to go through. So how do you remember all the clothes that you have, the TV, the couch, the furniture? Sometimes it's nice to have a video to kind of help jog your memory and make sure you're taking advantage of all those items and getting paid for those.
That's a good idea. And how often should you do this? Maybe like once a year or something, or
I think that's a good idea to do it once a year. Think about all the things you purchase or even get rid of in a year that's constantly changing. So just running through your house, um, you know, going through your closet, taking a video, and that way you can kind of know, like, okay, I had that shirt that's worth $30. And what they do, I mean, they'll go online, go to Walmart.com or whatever, and they'll start finding the items that you lost and start
uh,
pricing that out. And it
okay.
adds up very quickly, you could imagine. And it's not like I get stuff on sale, Joe. I might even go thrift shopping. They're probably not going to go to Savers to find these things. Like they're going to go online and they're going to value that product that you just lost in the fire.
Okay. So basically, you're recommending to kind of itemize all your personal possessions. Maybe you kind of strategize where you just, maybe itemize the things that are more expensive. If you have things that are, to you maybe don't have value and you lose it and you're okay with that, maybe you don't, but kind of focus on like the main things that are more expensive just to make sure you get that coverage. Um, so you can either itemize, or is there a way where you can just say, hey, this percentage of the house value or this amount of money is what I think would be okay for personal insurance coverage or personal property coverage, or um,
Yeah. Yeah. A lot of companies will actually build into the contract that does a percentage of the coverage of the house. So I'll see like 75% of coverage A will go to personal property. But you can go lower now. Some contracts are letting you go to like 40%. And really, I just say, insure it for what you have. So
yeah.
if you kind of go through what we just talked about and you start adding things up and you're like, geez, I'm at 200,000, then I would insure it for 200,000.
Okay. Okay. So what discounts do you offer? I mean, obviously we live in Rochester and there's a lot of healthcare professionals, people that work at Mayo and other companies. Do you have any discounts, or what's a way that people can save money when getting homeowners insurance?
Yeah, we're still working on that Mayo discount, Joe. I've been trying to talk to corporate for years on that one. I think it'll happen someday. But so the biggest thing is like bundle everything you can: home, auto insurance, an umbrella policy, life insurance. If you put all that together, you're going to maximize your savings.
Okay.
Um, but I mean, I think I've looked, we have like 50 different discounts. There's like a know your drive discount, which tracks your driving now, like speeding, braking, that's all factored in. It just runs in the background. A lot of my clients are doing that discount. If you have younger drivers in the house, you can do good student discounts.
Oh,
You can do uh, type of defensive driver type discounts. So there's a lot of stuff we're seeing on the house. We're seeing things like a smart home device discount, Joe. So if you have like a Ring doorbell, you get a 5% discount off your
oh,
home on that. So see if your insurance company has anything like that available to you. The umbrella discount's a nice discount. That's that $1 million liability policy that you can kind of bundle on your home and auto together. So there's a lot of stuff available, and I typically call every year to my clients and say, "Hey, let's make sure you're getting every available discount, right?" And
yeah.
oftentimes I'll find, "Hey, you got a smart home device this last year. Let's get that discount on your home. Just saved you $150, right?" Like they're out there. It's just a matter of making sure you're taking advantage of them.
Yeah, make sure you ask the right questions and work with a professional that wants to help you save money too, right?
Yeah.
So you talked about umbrella insurance coverage. So tell us a little bit more. Like, when does it make sense to like what is an umbrella coverage, and when does it make sense to have some of that?
Yeah, so I love the umbrella coverage. I live downtown Rochester. There's pedestrians everywhere. I'm always worried what if I were to hit somebody, right? So the umbrella simply gives you, it starts at $1 million and goes up from there. It's another $1 million liability policy. They're usually 10, $20 a month when you factor in the bundling discount. And it's just if you need extra. So if you ran into somebody, Joe, on the way to work, and they're in the hospital, they're in the ER, and they have, you can imagine how that can add up quickly.
Yeah.
$300,000, $400,000. It was an accident. You missed the stop sign. Whatever happens there. Your auto policy has to have probably at least 250,000 at a minimum. Some companies require more, but if that's not enough, then the umbrella policy pays out the difference, and
Okay.
it just solves that problem, right? So they don't come after you personally. Same on the house. If you had a bonfire, I've had this happen. Bonfire in the backyard. Some teenagers put a little gasoline on the fire. Their friend got caught up in that, right? Like, teenagers, right?
Yeah.
We've been there. And the umbrella policy paid out, covered a lot of the skin grafting for that friend that, happened. So it's nice to have it. The idea is to let us pay it and not have them go after your personal assets and get a personal injury trying to, get everything you worked hard for. But, $20 a month, let the insurance company cover that type of exposure.
Yeah, it seems pretty inexpensive, considering the type of liability reduction that it can have. So I like that. So tell us a little bit about flood insurance. When should you get flood insurance? Is it required? No.
Yeah, flood insurance. We don't do a lot of it in Southeast Minnesota, but I've added a few this year. One on a property that I own. It was a commercial property where the bank required it. Right, it was in the flood zone. I didn't want it, but the bank said, in order to give you this mortgage, I have to have you have a flood policy. It wasn't cheap. It was like $5,000. Just kills me. But that's a lot of times we're doing flood policies because it's in the flood zone. FEMA regulates it. Said, okay, this is in a flood zone. You have to get a flood policy if you want a mortgage. I'm sure you probably know more than I do on that. But then I had one where a client was up north. They're on a lake, and whatever reason, the lake was rising. So he said, I got to get this flood policy in place. So we set him up on a flood policy. I think it was $1,500, kind of reasonable, right? But not cheap, because he was in a flood zone. So it's based off of, if you're in a flood zone, it's going to be more expensive than if you're not in a high flood zone area.
Sure.
And he ended up getting that policy, felt safe about it. The flood has since receded and he wants to cancel it. So that happens too, right? But yeah, flood insurance is something that we worry about, and it's something you can talk to your agent and get that added. If you don't do that, you can also do sewer backup or sump pump overflow. That's something that I have on my house. I just recently finished my basement, Joe, a couple years ago, and carpets down there, drywall's down there, and there is a sewer. I worry about city sewer, and then also the sump pump. If water came up through that, I have $10,000 in coverage. It costs me about $6 a month to have that type of coverage. So it's inexpensive, but it adds up quickly. And I would argue probably should have 20,000, because 10,000 is going to cover, the mitigation company coming out and drying everything out. And then you got to pay the contractors to put up the drywall, replace the carpet. So you can imagine how that's going to add up, right?
Yes. I feel like nowadays, any type of contracting work that you get for your home is very, it's very expensive. So you should always consider twice what you think is going to cost you, because it'll probably cost you at least twice what you think, right? So you're right on that, having at least that coverage. So we were talking about, if someone gets hurt, like outside of your home, or there's a lot of people walking on the sidewalk. So how do you ensure that you're covered if someone gets hurt, like outside of your house or inside of your home? Is that through the umbrella coverage, or?
Yeah, so your home policy is going to have limits on it from the home policy. It's 300,000 or more. I always put like $1 million on houses if I can, because it's only like $5 a year more to have $1 million versus like 300,000.
Oh,
It's really cheap. So I'm always surprised that insurance agents don't do that. But so that pays out first, right? So let's say you come over to visit and I left a rake out and you hurt yourself, right?
sure.
Now I'd have to be proven negligent, and I'm not convinced, that might be negligent. But if that were to happen, you got hurt, I'm negligent, then the insurance policy is going to pay out that liability. I have, say $1 million there. And then if that's not enough, then the umbrella has another $1 million. So that's $2 million total in that example.
Sure.
What's easier money to get is the medical. So a lot of times you'll see a medical coverage part. Agents do like 1,000 or 5,000. I do 25,000 because again, it's like cheap. It's 25 bucks a year, but that's easy money to get because you don't have to prove negligence. So if you come over, you get hurt, you go to the ER, there's 25,000 to pay for that ER visit,
Sure.
and so that's kind of a little trick too.
Nice. So, what should people look for in an insurance agent? Like, what are the key parts of having a great insurance agent and someone that's gonna, as maybe invest in some rental properties or kind of your wealth grows? Like, what should you look for in an insurance agent?
I mean, just somebody who cares and is asking a lot of questions. Like finding out, you know, things before offering the features and the benefits. If somebody's asking you a lot of like, you know, questions on, is your basement finished? Do you have a hot tub? Do you own any farmland? They're asking questions that are like making sure that you're being covered. And then
Sure.
they're going to bring up some solutions to that, right? So somebody who asks you a lot of questions is somebody who cares and is making sure that they're giving you the right coverages for your specific situation. Everybody's different, right? Like you might
Sure.
own some rental properties, Joe. So that might be, okay, maybe an umbrella policy is a good discussion to have, right? Whether you get one or not, at least bring it up. And I
Sure.
always say, like, there's no wrong answer. I just need to make sure that you're covered. You can tell me no all day long, but let me at least tell you about this coverage option. And then you can shoot me down or say yes to it if you want it, right? No wrong answer. But I think that's what makes a good agent. That's somebody who's asking you a lot of questions and they're checking in with you every year. I sometimes ask people like, when's the last time your agent checked in? It's been like 4 years.
Yeah. Okay.
And like we get busy, but it's like could at least give you a call every once in a while. So
Yeah. So you should expect at least a call or touching base at least once a year. If it's more than that, that's great. But once a year seems to make sense. Um,
yeah,
from kind
yeah,
of
we
our
try to do that.
conversation.
You know, give a
Okay.
birthday call or just check in and see how we're doing for you. We try to check in before renewal because that's a
Good.
nice point to be like, your policy's renewing, Joe. Has anything changed? Do you have a few minutes to go over the coverages, check the discounts, and explain, maybe rates are going up this year or maybe rates are going down? It does happen. I know it's surprising. Most of the time it goes up, but sometimes they go down. Be a nice phone call to kind of know that, right?
Yeah. So I know we're kind of talking about people that are buying their home, like personal home. Maybe it's their first home, maybe second, third, or whatever. But let's just have some fun. Let's say someone, because I know people have been very interested. A lot of my clients in buying a rental property or investing in real estate. What are some things differently that you should consider if you're investing in real estate when getting homeowners insurance?
So like buying a rental property.
Yeah, but yeah, exactly. So yeah, let's say you want to buy a rental property or duplex or something like that.
Yeah, yeah. Rental properties are. I mean, they're similar to a home policy, but it's just not going to cover your personal property typically, unless it's like an Airbnb. But you'll want to have a business owner policy, right? A BOP
Yeah.
policy, we call it, and it's going to cover the house. It's going to cover the roof. Everything's going to be very similar, except you'll have coverage for loss of rent. Let's say that somebody
Hmm.
the house burns down and you're expecting that $1,500 in rent to pay off your mortgage as an investor. So the insurance policy is going to cover that in the commercial side of things. Um, there's some little nuances, but for the most part, it's specific to that investor that needs to make sure that they're covered, right? I
Sure.
do recommend doing like 2 million for liability, just because I think there's a little more at stake. And if you put it in your name, Joe, let's say that it's titled in your name and not a separate LLC, you can just add an umbrella policy to cover that risk,
Gotcha.
right?
Okay. So it seems like it just depends on the situation, the type of title that you're in. And so I guess I'll full disclosure, like this is a conversation where we're hoping to bring some value with questions and information that you should know about insurance. But for any questions that you have, whether they're legal or insurance or real estate, you should always contact a professional. I'm sure Travis would be happy to help if you have insurance questions. I'm always happy to help if you have real estate questions. And if you have further questions on anything that we covered today, let us know in the comments below. We're happy to follow up with you. And if you found something surprising or something that you didn't know, let us also know in the comments below, and it'll be fun to explore more on those topics. Travis, thank you so much for your time. Hopefully we'll be working on some more videos and provide more value to everyone that's interested in buying a home.
It was fun. Thanks for having me, Joe.
Thanks, Travis.